Hi, well, today I'm joined by Kieran from Stryde Accountancy company, who deal with a lot of dynamic companies and get a good focus on results and performance. So it was only natural that we have a conversation, and we thought we'd record it. With everything that's going on at the moment, I thought it'd be good to get Kieran's insights in terms of the world and how accountancy can actually help companies grow and develop. So welcome, Kieran.
Thanks, Tim. Yeah, appreciate it.
Do you want to just actually give us a quick intro as to a bit about Stryde, so people may not know you?
Yeah, sure. So Stryde's an accountancy firm. We specialise in helping people have financial clarity. So the idea is you have a good starting point, good sort of data entry, good data in. You have good flows within the business, and that could be connective software, etc. And then you have good data outputs, and that might be data dashboards, it might be good, decent reports, whatever it looks like. And the idea is everything we do is about giving the business leader a good way of making decisions quickly, timely, etc. And it's all very tidy in that financial function. So we generally work with businesses that are relatively ambitious, quite fast growing, in spaces like franchising, e-commerce, and we do delve into just general SME as well.
Excellent. Okay, well that's good. And I think it's your love of data and our love of data that has brought us together in our conversations over the recent months and things. So just really want to talk to you about and just get your views on what's happened with the upheaval in 2020. And rather than looking back at what's happened, from where we are today, what do you think is the trends you see going forward?
Well, I think you have to look backwards just a little bit, just to see kind of the precursor to what it looks like is going to happen in the next 6 to 12 months. So if we look back, what's happened so far, we have seen that from a macro perspective, the number of jobs being advertised has now halved since this time last year. We know that lots more people are claiming job seekers allowance. We know that businesses are getting back, but there was a point at which only about 12% of businesses grew. We know that larger businesses are tightening their belts. So there's a lot of indicators towards what could potentially be a recession. But then on the counterbalance of that, what we've got is people that are spending less outside of their homes. Therefore, they have more disposable income, which means they're actually spending more online.
Yeah.
They're also reducing their own debts down as well, which gives them more capacity to take on debt at other points for bigger purchases. So what you're seeing is this kind of weird combination of potentially, what looks like there's a recession coming, yet at the same time, spending habits haven't actually curbed as much as you'd expect them to have curbed, particularly not in online sales.
Yeah.
Which is quite interesting. In fact, because of the nervousness around, the sort of going into shops, actually, hitting the floor, as it were, people are looking to transfer their spending into other areas. So that's quite interesting. And if you take that and then look forward, what we've got is there is going to be some rocky times. We can definitely see that, because as it comes to the end of the furlough scheme, we're seeing businesses that are unfortunately making some of their staff redundant. And we are seeing, which I believe will increase the number of self-employed, the number of people starting up their own business in that process, as it did in 2008 as well. And we've obviously got Brexit coming up it's just starting to be talked about again, isn't it now?
Yeah.
Brexit's coming up again. So at some point there's going to be some issues around that. However, if you look at the stats, online just is not being affected at all. So there's a consistent rise. In fact, if anything, all of the negativity that's happening in the general market is actually boosting online, which I think is really quite interesting. One thing the coronavirus has also done for the current economy at the moment is it's also opened up the awareness of businesses to the wider world. So you've got businesses that are selling online now that haven't sold online before, perhaps, but are selling online where they would have perhaps focused locally on, delivered something locally. It may not have been a product, it may have been a service. They're now looking to they run it. If they run, let's say, a Zoom session, it might be they've got people in Israel and America and Australia coming onto that Zoom session, even though they'd normally be in Warrington. That kind of setup. So, lots of different changes.
Okay. So basically, it is recession coming, but very much disjointed in terms of the kind of companies that are being hit.
Absolutely.
Do you see then the changes being reflected in spend patterns of businesses, particularly around marketing and advertising?
It depends on the business. So with our own customers, since literally the first day that lockdown happened, we've been promoting the complete opposite, actually. If you look at all the trend graphs from 2008 and all the businesses that came out really, really strong after the last recession, it was all the businesses that invested in marketing. Google, Airbnb, all these that had that space and capacity to continue to grow and invest during that time. The challenge is you just have to get more focused on return on investment. So whereas before people might do, I suppose what I think might happen is where at the moment people will do marketing and also advertising, and also they'll maybe do some sponsorships. What we might see is certain parts of marketing might drop. So the sponsorships might pull back because it's hard to record return on investment from those areas. Whereas digital marketing and things where it's very analytics driven are going to definitely be places people are going to put their trust in more, and because they can see the return on investment from their spend. I think that's how the big businesses that throughout 2008 did it. I expect that's probably what's going to happen again. Okay,
so you're encouraging increased spend to get that market share, get that boost as the economy normalizes or grows, to get the better results, is what you're saying.
Yeah, think of it like a race car. So you're going down a track, and what you don't do is you don't consistently race all the way around the corner. Yeah. What you do at the same speed, what you do is you slow down into the corner. So that basically means that you're cutting your expenses. It may not be marketing, but you're cutting your expenses as a business and pulling yourself in, and things that are not analytical based, or you can't see the return on investment. And then what you do is you absolutely throttle the pedal before things have changed. So before you're out of the corner, before things have got back to normal, you push your foot on the pedal and you drive as much into that area. Once you've got to know it's working, you drive enough into that and you get around that corner and drive out. And it's the same, I think, with all businesses now. You do have to pay attention, but at the same time, this is a massive opportunity to take market share, land grab, all those sorts of things, because there are going to be some businesses that they believe they have to drop back on marketing. So those that don't drop back on marketing will have huge advantage and huge land grab.
Yeah. Okay. I mean, it's interesting because we operate in a number of different areas, and we're seeing patterns of spend changing. Primarily, we're now seeing that uplift in terms of people, the amount of money people are spending with us, because we are immeasurable. We are good at delivering ROI. So what we're seeing is reflected by that. What would you say to a business that is perhaps not doing so well, or maybe doesn't have the cash reserves to invest a lot in marketing? Would you say that spending the bounce back loan money on marketing is good spending? Because you hear about some people taking those loans and they're using that working capital just to maintain staff numbers and things like that. So, from a financial viewpoint, what do you see in terms of how can you make the numbers add up on the accountancy side?
It's a really good question. It's going to be really dependent on every business. Every business's situation is going to be different. But so I'm a real advocate of something called the lean startup process. Whatever size of business, not just for startups, but most businesses are going to be startups for quite a long time at the moment. That seems the model at the moment. There's not too many established. Even businesses with 250 staff can still be a startup technically. So you're looking at that mindset of when you test anything, and that's not just marketing, the whole business, but specifically for marketing it's useful, is you go, can you spend cheap? Can you spend quick? and can you find out whether can you prove some form of point or hypothesis really quick. So it's like a scientific experiment. So what you do is you go, okay, let's say, I mean, the easiest place to look at is like Facebook ads. You're going to A/B test every Facebook ad, aren't you? You're going to be running them side by side. You're never going to run one ad and just put 10 grand into it. You're going to invest slowly until you find one that works. And if you're a smaller business, you might invest, you might boost a post for £5. It might be as simple as that for a week, and then, but over time, what you're going to do is you're going to go, that works. Now let's invest more into that and really push into that because I know it works. And I think that's the methodology that businesses need to have at this time, is that test, measure, and then once you find something that is giving you a suitable return on investment, you put the cash in at that point on a larger scale. One really good example though is so with tech businesses, what I've seen loads of times is tech businesses or lots of people like building software. And they have the Steve Jobs mentality of build it and they will come. Actually, in reality, that isn't actually how most businesses work. The way most businesses work is, or the best way to make most businesses work is, what you do is you say, what's the solution I'm trying to solve? And you deliver something that solves that solution. So it may be that, let's say, I know you're trying to help people with online storage, with storage of goods. What you do is you might go and just phone somebody up, ask them if they want to store some goods, and then you go and find somebody who's a space to store it, and you go say, how much does it cost you to store that? And you literally just be that kind of marketplace for the two sides. And that's very time intensive, but cost cheap. And then eventually what you can do is, once you've got the proof points, you can then start to build a software around that, and eventually you've got a whole software process going, and you then have a route to market, you know how to get to your clients. So it's about, as you're building any part of the business, but particularly kind of that marketing segment, which kind of links into that product development, you have to be testing with what is called the minimum viable product. What is the cheapest, simplest way you can do it to get an answer? And once you've got that, you go all in, and you make sure you invest to grow that part. And what happens is you invest and you get some really good returns, and then it goes like this, and at some point it starts to tip, and you start your returns don't.
Law of diminishing returns.
Exactly. So at some point, what you have to do is you have to kind of then look at, okay, what's next? And then you can invest more. That's where you get your multiple marketing strategies. So you might have various, for example, it might be pay-per-click on Google, it might be Facebook, it might even be Bing, it might be, you'd move through the different areas, but you get one to work, make it work, and then move to the next one, get that to work, and then move to the next one, etc.
Okay. I mean, that resonates very much with our methodologies here. What's interesting is, in terms of you said about the lean startup and the test quickly, prove it. The one area that I could see, and I was thinking about this, was organic search. You cannot do that in organic search, and we find that is a better medium to long-term strategy for most clients. From an accounting and financial viewpoint, how would I persuade you to invest in organic search if you can't do the lean startup quick test? Does it work?
So you can use different metrics. So the key thing is to know what's the outcome you want, and then you can pull back into leading metrics. So for example, I've recently purchased a software, or I'm bought into a software subscription, which costs quite a bit each month. And the software automates some of my outreach on LinkedIn. Okay. Now that's fantastic. It saves me an absolute bulk load of time, but it's quite expensive, which means I have to get a return on investment. But the reality is, I wanted to know whether it works in month one, but I might not get a return on investment for 9 months. Okay. So that is pretty much the exact scenario you've got there. So what I did was I said, okay, what are good metrics within this? So how many people do I need to connect with on LinkedIn? Or attempt to connect with? How many of those need to accept for that to look good? How many of those need to then respond to my messaging? How many of those that respond do I need to actually have an open conversation with and find somebody who's interested in buying? And I've got percentages that I've worked out from industry standards and from my own stuff. That's what should that look like? So all I knew by the end was, I know that in that month I need to generate X leads And and before that, you could go one step further. Before that, I needed to generate X responses.
Yeah.
So you almost need to go into the metrics that the leading metrics, not the lagging metrics. So you'd go, if it was with organic, you'd be looking at, okay, how many
visibility and impressions on.
Yeah, exactly. What have I got from that?
Search console, because they would appear even if you're not getting the sales month one, but well, hold on, we went from this point in the visibility on Google's results pages, we're now here. And you would take that as proof of the concept working, even though we might not have delivered sales, because sales would come month two.
Yeah, and what you do is you go, for these 30 days, my test is going to be I know this is giving me a return on the investment I've made, because you have a long-term plan if it hits this level, and you have a bit of a target of roughly where you'd want it to get to. Now, obviously, with organic search, it's not quite as straightforward as that, because you're competing and things. But you'd have an idea of where you think good progress looks like.
Yeah.
And then that would allow you to clarify whether or not you're getting it, even if you're not actually getting revenue from that, but knowing that you're making the right activity towards that revenue. I guess another analogy is it's like a salesperson. When a salesperson starts in month one, you can't tell whether they're any good.
Yeah.
You probably won't know for 18 months.
Yeah.
Exactly. So you measure the activity that they're doing, how long they're spending on a call, number of decision makers they're speaking to, those sorts of things.
Okay, that's really interesting. So, how does Stryde help people in these challenging times? How do you actually help people deliver? You talk about growth, and some people are just worried about not shrinking or not even being around in 3 months' time. What is it that Stryde do that helps people take them forward in these challenging times?
Biggest thing I would say is clarity. So when you're in business, often, well, I tell you what, let's do it this way. There's a famous adage, which is what you measure, you manage.
Well, yeah.
And that means that, you can't improve things if you don't know where you are now. In sports science, it would be, you don't know if you've improved your, how fast you are on a 200 meter run, unless you test it, do some training, and then go and test it again. You need those 2 points. So the way in business we do that, there's loads of different ways you can do it. The way we prefer is to look at something like the balanced scorecard approach. So large organizations like Tesco's use this, McDonald's use this. It's quite a well-known philosophy. And the idea basically is you would set certain KPIs, key performance indicators, certain metrics within your business. And the idea of it being a balanced scorecard is you'd have it in different areas. So you'd have marketing metrics, you'd have finance metrics, you'd have operational metrics, you might have customer service related metrics, and you may even have some social responsibility type metrics as well, depending on the type of business you are. And what you do is you'd want to have about 8 to 10 metrics roughly that you measure at kind of very top level, that you're on effectively like a dashboard or a scorecard, that you'd go, these are the things that I know that they're indicators to my success in my business.
Yeah.
Obviously our focus is the finance.
Yeah.
Your focus obviously is marketing, but we know that if somebody says to me, how do you do a cash flow forecast? Well, I have no idea how I'm going to do a cash flow forecast unless you've got some marketing stats. You tell me what your marketing stats are, and I'll tell you what your cash flow forecast looks like. Otherwise, we're just making it up. You want to give me some real figures. And it's the same with all parts of the business. They're all interconnected. Right. So I would say that's what people need. That's what we give. We give that connectedness. And sometimes that is just the simplest part of it going, your data is rubbish. It doesn't give a true reflection, and actually, or inaccurate, or it's, you don't get it until year end, or a month after end of the month. That's not enough time to react in the current times. It's not agile enough.
Okay. So you would go in and you would actually work with business owners to set up these scorecards to provide this clarity, and you would walk them through and actually talk to them about things like operational metrics or marketing metrics needing to be on that balanced scorecard then.
Yeah, I mean, different businesses need different things. So if some very small startup businesses might only need a as simple as just having an accounting software that has good data, because then they can get reports from that area, and then they might have a CRM system that gives them information from marketing. They might have, so at a very entry level, you can pull that and put it together.
Yeah.
The bigger you get, or if you have investment and need to do reporting, if you have once you hit sort of about the maybe 200,000 type mark, you start to get to the point where the business, some tiny decisions in the business can make big impacts on the end turnover and customer service that you have. And that's the point where you need to start looking at connecting some of these things together and at least having an idea of what those top KPIs are. And by the time you get to sort of 500,000 to 1 million, if you haven't got a dashboard in place, you're pretty much running blind for most people.
I mean, most of our clients are probably well over £1 million turnover, although a lot of our e-commerce clients actually, some of them will be, still in the hundreds of thousands, but looking to grow. So if they are, if they're in that growth phase, they're relatively early stage, maybe a year or two into growing their e-commerce business, have you got particular metrics that you would say you've got to have this one, front and center, and how often would you look at some of these things?
It depends on how statistical and analytical they are. We do find a lot of these people business leaders running e-commerce businesses are quite analytical quite often. And if they are analytical, then they can get into things like customer lifetime value. So they're managing what's the lifetime value of particular customers. And they can measure that using things like the frequency, how often, when was the last time somebody purchased from me, how much are they purchasing from me, and start to delve into those sorts of figures so they can see trends in what they're doing.
We're a huge fan of looking at customer lifetime value and then also customer lifetime profit as well.
Yes.
Then calculate how much you should be spending on acquiring either that customer as a single unit or classes of customer. So
absolutely.
Your bronze, silver, gold type customers, what's the lifetime customer value of your golds? Well, if you know where your golds come in from, the lifetime customer value of those may be significantly multiplier of your bronzes.
Absolutely.
Purchases.
And sometimes it's easier to get money. It's easier to raise funds from customers that are extremely loyal than it is to raise from trying to raise less loyal customers and get a little bit out of them is harder than getting a lot more out of very loyal customers who have already bought into your brand and are ambassadors for it. So I would say that's probably one. Another one, I mean, you've got to be looking at the marketing metrics as well, just generally, what's going on, the conversion rates and things like that, average order value, just the basics. Just at a very high level, it is more lagging, but gross profit is a very good indicator of a business's commerciality, the business model. How good is your business model? Most of the time, particularly with e-commerce businesses, the operational costs, the general costs, they are variable, but they don't scale up quite anywhere near as quick as the cost of sales. So looking at things like cost of sales per product. And focusing on, there's sometimes I've seen businesses that have maybe 20 products and actually only 5 of them are really giving them 80% of their profit. So per product is quite useful.
That's an interesting one. I think a lot of e-commerce businesses would benefit from that level of analysis of profitability, because we asked that question actually onboarding new e-commerce clients, or all new clients. What are the lines that are most profitable for you and provide you with the best return? Because why not push those? And it's still quite interesting to see how many of those don't necessarily know those numbers off the top of my head. These are our 5 most profitable products, that kind of.
I think it's vital, isn't it, for that kind of thing. From a general financial perspective, it's probably worth looking at, even just what's the plan for the business is another thing to look at. If your plan is to be super ambitious and really, really grow it, or you're in that kind of growth phase, then you need to be looking at your cash balances and understanding, how much have I got to invest. So if you look at the balance sheet, it's called a balance sheet because the idea is it's a balance between assets, things that you have that have value, and liabilities, things that you owe at some point. So the idea is this assets bit should be higher than your liabilities, because it means that you've got cash to pay, or you can sell things to pay for the things that you owe. What we find a lot of people do is they spend a lot of time looking at their P&L, and they're actually pretty good with their P&L. But as soon as you start talking about balance sheet, they haven't paid attention to it at all, or don't really fully understand what things mean in there. But actually, in terms of understanding what cash you've got available, it can allow you to do things like get investment from, in terms of debt investment, so debt from the bank or whatever route. So lending can be really useful. If you're some sort of production or manufacturer, and there's some sort of equipment you need to produce what you're doing, you're not sort of just drop shipping or anything like that. There's going to be some form of investment you want to get, so invest in those. So having cash available for that is really important. Understanding the value of those assets is really important. Should I buy or should I lease? All these sorts of things start to come in, but you only get those if you really understand that balance sheet. So I would say it's not necessarily a metric, but generally just having an understanding of what is the cash balance, what value have I got in my balance sheet of things going on. Okay,
that's interesting actually. The fact that people aren't looking at the balance sheet and they are focused on P&L. Okay. We talked about investing more in marketing and cutting costs. Have you got any quick tips for people in terms of areas where you see that often businesses can make smart cost cutting, particularly if they're e-commerce businesses? Are there things where they're not running lean enough and they could be running leaner and therefore spending more on growth and less on unnecessaries?
Yeah, there's probably a couple of areas. I think as a general rule, every business should go through their P&L, not necessarily balance sheet, but they should go through their P&L on a quarterly basis and remove any expenses that they don't think are necessary from the next month. Particularly subscriptions are big here. You sign up to Calendly, you sign up to Slack, you sign up to this, you sign up to that, and eventually you go, is my team actually using it? You evolve to something else. And over time, if you've been in business 3, 5, 10 years, that starts to really add up, those subscriptions. And I would say though, I reckon a lot of businesses have probably gone through this process if they had any form of hardship during lockdown. The businesses where it will probably make the most difference, the businesses are probably doing better and have kind of grown during the period or continued during the period, because they probably don't pay attention to it. But actually, more cash means more to invest, so you can grow quicker. So it does definitely make sense to look at that. What other things could there be? I'm not sure how to word this, but one of the biggest things we also see is most businesses have in their industry a revenue per team member, revenue per employee type benchmark. And that's really good to track how efficient you're running as a business. Where it's kind of a bit of an operational metric, but what it does allow people to do is not to take on that new hire until they've maxed out, because it's very easy in businesses as you scale. Once you get over sort of about, particularly around 10, but maybe even from 5, there's a lot of stuff that can be done, but should it be done? So, you can probably, one of the things that they say, if you look at all the really very, very fast growing businesses, is they're always really messy. And some people like tidy business, but actually that does slow your growth down to some degree. Tidy business does slow your growth down. There has to be a little bit of messiness in that growth, because, there's some things that task list of 200 tasks, focus on the most important 10, and your team, and don't try and finish all 200 before you start employing new people. Just focus on the 10 and make sure that you max out their time dealing with those 10. And you know what? There's 190 left. Some of them are probably never going to be that important. Or outsource it or whatever. Try. It's about it's building capacity basically, and working to your capacity, which I find is actually a really common issue.
That's really interesting. You'll be pleased to know we track revenue per employee here, so we're looking after our numbers. And I should ask you, actually, thinking about, because we use we use rolling averages as well to smooth out curves, because obviously, we're now coming up to 14 people, so we're not enormous. So do you use rolling averages to help people sort of see trends in their data?
It depends on the type of business. So for most product-based businesses, particularly ones that are kind of consumer-led products, then yes, because Christmas is going to be a big time. You can have Black Friday. There's certain times of year that are going to have higher spending points. Therefore, your business will. You should be expecting that to happen. So yes, absolutely. So what you can do is you can do. You can almost look back to when you first start in business, you're extremely efficient. Okay, or most businesses are. So you can almost look back to previous averages of yourself and make sure that you're maintaining those averages as you grow and not slowly losing turnover per employee and also profitability.
Yeah.
So that's the key. So you can look at other averages like your previous if you want to, or you can seasonally adjust it. But some businesses don't need to do that. So for example, we're a monthly based business. Everyone pays monthly. We do have some project work. We do have some ad hoc stuff that comes in, one-time stuff, but generally we don't really need to smooth in our business. And even if we had, a lot of businesses that do sell online do go through e-commerce quite heavily, and our service based particularly, probably if there's actually subscription based, not service, subscription based, probably don't need to basically.
Yeah. Okay, that's interesting. Before we wrap up, is there anything that you think that's for the final sort of run into towards the end of 2020? I know we're not far from summer. It was warm yesterday, but is there anything that you would recommend our clients, maybe particularly our e-commerce businesses, because I know you have a lot of experience, to do between now and the end of the year? There's a good financial sense check.
Yeah, I mean, it's a good question, actually. Obviously, this is the busiest time of year, generally in e-commerce for most e-commerce businesses. So it's going to be probably all hands to the pump, as it were, at this time. So I'm trying to think the biggest thing I would say is if as a business leader, you ask yourself and you go, right now, could I be in this meeting? So I'm meeting you, Tim, if we're chatting here and we go, should we do that? Or should we do that? If you can't answer that on the spot by looking at your information, you probably haven't got things set up right.
Okay.
Yeah. If you have to go away and say, I need to go and speak to or get an accountant to help me with this, or I need to go and create a report that's going to do this, or I need to edit my cash flow to do this, and this. If you can't do it in that spot there and then and make a couple of adjustments to what you've got going on, and there's reporting and the things, you've probably not recording things and displaying them quick enough to be agile to make those decisions.
I think that's a great tip and a great point to close on. So wonderful. I'm sure people might want to get hold of you and talk to you directly. So how would they be best to get hold of you, Kieran?
So they can contact, best thing probably is our email, which is hello@stryde, stryde.co.uk, or you can check out our website at stryde.co.uk as well, and our phone number's on there as well.
Excellent. Okay. Well, thank you again very much for your time today. It's been really good chatting to you.
Thanks, Tim. Appreciate it.
Yeah, look forward to catching up with you again very soon.
Absolutely. Yeah. Take care.